Ripple and XRP. Most people are missing the setup here. It's going to be big retail staring at daily price candles. Institutions, they're rewiring the game. XRP, who holds it, how it's deployed, and how ultimately the float is controlled. In this video, we're going to look at a couple things. Why 10 to 20 billion XRP could end up locked up in DeFi is a strategic reserve. Why Ripple selling XRP long-term might be absolutely bullish if it's redirected to the right places, ETFs, banks, payment rails. And why the real power isn't on Twitter, it's on the balance sheets. We'll hit the cracks that are showing up in Bitcoin treasury wrappers currently and the record-setting pace of XRP ETFs ramping up. And lastly, while a hybrid system of off-chain and on-chain settlements could be the real future of tokenization and why it's so important for XRP, we got a lot to go over. Let's get into it. XRP ETFs surpassed 1.2 billion assets under management in only 4 weeks. So people are, well, it's not doing anything for the price. That's 1.2 billion in 4 weeks. What about 6 months? What about a year? This is going to continue to compound. Right now, 1.23 billion assets under management reached in less than 1 month. That's big. 597 million XRP holdings stuck in these funds here. And Canary Capital, look at that, dominating right now, 56% of the total assets under management. Now, it's not just Canary. We see Grayscale, Bitwise, Franklin Templeton. This ramp up is the fastest for an altcoin ETF since Ethereum, and I think just an ETF in general. When we just look at, the ETF market, this is a breaking record pace. This is very fast, indicating strong institutional interest and regulated exposure vehicles. Flows reflect demand for regulated XRP exposure rather than short-term trading. That's the other thing. Remember this. A lot of these investors here, they're investing for the long term. These are sticky investments. They're not just, trading the ups and downs of the day. No, they're making a long-term investment here that will compound and that will have a big difference in the price over the long term. And we saw that happen with Bitcoin. At first, it didn't make a big difference, but then it did, and in a big way. Institutions preparing to deploy 10 to 20 billion XRP into DeFi. This is from Hugo, saying institutions with 10 to 20 billion XRP are preparing to allocate into XRP DeFi. This allocation is framed as risk management as regulatory clarity and infrastructure improve across the digital asset landscape. Large-scale DeFi use can lock up billions of XRP and really reduce the circulating supply, the supply on exchanges, the supply available. This is demand and supply at its best, supply and demand. You're going to see surging demand and lowering supply. What's going to happen here? Think about it. The resulting supply shock could be driven by institutional strategies, not retail speculation. But remember this, retail speculation, it ain't going away. You're going to stack that on top of it. Making a fundamental shift in market dynamics. This is nothing like the past here. Again, an institutional scale, risk management, strategic allocating amid improving regulatory clarity, and it's going to have a supply impact. This could be big, and it's not just Flare. Flare is a big part. ETFs, XRP locked up in all sorts of these different vehicles that just leaves less on the market available here. Whales are accumulating right now. People are panicking. They're worried. Whales, the big money, they know what's up. XRP whales accumulate 340 million tokens amid retail panic. Retail selling, price falls, again, from its 367 high. And your big investors, they understand this is an opportunity. This is the fear zone, max fear, and this is where they are going to build up their position, again, for a long-term investment. Supply moves from short-term trades to long-term holders. So you have these retail investors with a very short-term horizon with their investment, and they're just gifting it away to your big institutional investors here, and they'll gladly take it. They'll gladly take your XRP at much lower prices. And crypto in general. Crypto right now is max fear, and your institutions, they're stepping up. They know where the future is going here. Now that we have clarity in the regulatory space, you have adoption, you have everything. The perfect storm here for cryptocurrencies. Tokenization. This is so interesting. So when we think about fast blockchains, XRP Ledger, 3 seconds. That sounds really fast. You have Solana. I think Solana is a half a second, even though it's not final for about 12 seconds. There's no finality. But even if we look at a half of a second, that's way too long for stock trading and things of this nature, they really need to be blistering fast. And you had Chris Larson. He did a 10 million seed investment in this yellow network here. Currently, L1 blockchains are far too slow for high frequency trading, securities trading, operating in seconds rather than microseconds. I mean, you have to be blistering fast. If you are taking multiple 3 seconds, a half a second to do your trades, I mean, a market maker could just get wiped out. People are going to run by you. That's not the reality. But we know they want to take all of this on chain, right? Fully on chain. Central limit order books for liquid stocks are impractical due to latency and arbitrage risk. So you're going to have this hybrid system, this system where you're doing some of this stuff off-chain execution, matching in the microseconds you need to run something like this, and then they're going to pull all of it on-chain for final recording on the blockchain and this layer 3 clearing, state channels for net settlement. This is big, and Chris Larson's investing in this. You know XRP is part of that, and the people, once you have the solution, you know within the next 2 years, they said they want every security on-chain. So there's a lot of growth here in RWAs, stocks, bonds, securities. BlackRock, they want it. Everyone wants to take this on-chain, and they want it to be an autonomous market like we see in crypto, right, where it trades around the clock. And that's where we're going to go with this. And instead of having T1, this is going to be instant settlements. You'll be able to sell a position and get your liquidity immediately, cash out to stablecoins. This is the future, and this seems to be really interesting with this yellow network, this layer 3 clearing mesh that makes crypto work with traditional markets here. Ripple's potential XRP divestment as strategic redistribution. So this comes from the idea of the Clarity Act. The first draft said, you know what, no single entity can hold more than 20% of the supply. Right now, Ripple has more than that. Now, I've seen versions of this that stated that if it's in like a escrow, a lockup, something like that, that it wouldn't count. So we really don't know until we see the final version of this. But I'm trying to get out ahead of this because people are talking about it. It may happen. And so we got to think about this ahead of time. So if Ripple has to divest in some manner, understand this, they're going to use smart escrows, allowing time locks, compliance controls, programmatic releases of large allocations, and probably your big buyers are going to be ETFs, asset managers, payment rails, sovereign entities, people like this. They're going to be careful if they have to do this to not, of course, lower the price of XRP. The value of their company is pretty much their XRP. I don't care if they're the biggest payment system company in the world. I don't care if they're the biggest RWA company in the world. Nothing will ever match their XRP value. That's just the truth. XRP will grow faster than any business they could get. They don't want to harm its value. But what could happen here is one of the biggest criticisms of Ripple and XRP is how much XRP they hold. If they're forced to divest and they get it to the right entities out there, it becomes even more decentralized in terms of the ownership of the coin, and it actually could help both Ripple and XRP long term. So this is not something that we should fear, and Ripple's been slowly doing this anyway, but if they have to speed it up, not a big deal. They will make this work, and it could be bullish really for XRP long term. We'll see it play out. Again, that 20% cap, it may not make the final bill, or they may have an exclusion or carve out for escrows. We'll just really have to see how it looks once it does pass. Now, 21, this is our buddy Jack Mallers, the biggest XRP hater out there. His SPAC, 21, launched here. And on launch day, it fell 25% on the New York Stock Exchange, the day of debuted here. Really, these treasury companies, they're underperforming just raw Bitcoin or really whatever the underlying cryptocurrency they have here. Market preference right now at a time of risk is for the cryptocurrency itself, not for these companies here that are using a lot of leverage, that are adding to the risk profile. And Jack Mallers, not a great day for his debut. Now, if we go on a bullish time, will we see these treasury companies rebound and go on a terrible? Probably, because again, they're using leverage to push things here. It's just you have that fear out there. But not a great day of trading for our buddy Jack there today. Saylor, he's trying to pitch this Bitcoin banking model, and it really has a lot of liquidity risk. Now, the issue is this. What he's saying is not wrong. It probably would work in theory, but we're moving out of theory. Banks over collateralized deposits with Bitcoin, paying 5 to 10% on accounts with Bitcoin compounds. The structure, again, he's kind of trying to sell strategies, quote unquote, strategy to the banking system. But the core risk is this: banks face demand deposits. Like, you can't go to strategy and be like, give me my cash, right? It doesn't work. You just sell off the stock. But with banks, you can. And if everyone rushes and they want their money, well, this type of system doesn't work. It might work for sovereigns, might be a great fit for them, but it's just a liquidity mismatch for banks. So he's trying to pitch this model, this Bitcoin-backed banking model, basically saying, you know what, the current system we have now, you don't get enough interest on your dollars. It's not even enough to meet inflation. That's true. But are these Bitcoin-backed banking models going to work? I don't think so. Again, it works in theory if everyone leaves their money in their accounts. But if there's a bank run, it's all over Red Rover. So, yeah, I don't think Michael Saylor is going to have too much success there. CFTC margin pilot welcomes Bitcoin, Ethereum, USDC, but excludes XRP and RLUSD. I'll tell you that. The CFTC pilot allows FCMs to accept Bitcoin, Ethereum, and USDC on margin for swaps. For futures, the program introduces reporting, custody, and volatility requirements. But again, those are only assets there: Bitcoin, Ethereum, USDC, no XRP, no RLUSD, or any other assets. This is why I say they're just starting out with the biggest, no big deal. They will expand, just like we saw with ETFs. Started with the two biggest, now it's expanding throughout the broader crypto space. There's nothing wrong with XRP or other assets within crypto. This is just, again, a pilot, a testing. You just start with a couple assets and they'll expand out. Not a big deal. All right, BlackRock, staked Ethereum ETF signal institutional shift to yield. And it's not just going to be Ethereum. It's going to be a lot of proof of work coins out there. I think these are going to be popular. They're going to put a lot of things together where someone can get exposure to crypto, earn back a dividend, and more crypto. Like, they're going to like this type of setup. And I think this has been holding back Ethereum, because why am I going to buy the ETF? I have to pay you a fee, of course, a small fee, but a fee nonetheless. And I don't get staking rewards. I'm losing to the person that holds Ethereum direct in a significant way. Once you bring in ETFs that allow you to get staking rewards, I think you're going to see that be a more popular product, and you should see, hopefully, Ethereum take off, because it has been the dog of this run. We've been waiting for it, and it's just holding the whole freaking market down. Let's get this sucker going, and it'll give us runway for everything else. Lastly, Senate GOP offers crypto bill concessions and bid for bipartisan deal. I haven't read through the whole thing here. I don't even know if they have all the details out. Probably not. But enhanced standards and safeguards for consumer protection basically means probably the government wants to get into our business. Bankruptcy language, clear frameworks for crypto assets. That's a big deal, actually. These companies go bankrupt and they pay their debts with your assets. We'll have to see how they word that, but that is interesting. ATM rules, so you'll have to have some sort of operational requirements, licensures. I've never used a crypto ATM in my life. Maybe some. If you ever use one, let me know. And risk management here. So it looks like they're coming together here, and this might be done. And we really want this to be done before year end, because next year they're working on midterms and it's much harder. Maybe it gets done. We're getting close. They're making some concessions. It seems fairly reasonable. We're not going to like everything. I can tell you this. There'll be things in this bill we do not like. But even bad laws are better than no laws. Lawlessness ain't great. Gary Gensler's out there just making it up as they go along. We can deal with bad laws. We'll work around it. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.